Hello, Lionesses. Welcome to the Lioness Grotto, a space for women founders and entrepreneurs to share their journey, be encouraged, know you're not alone, you are limitless. My name is Ananjo Roge, founder and CEO of Why Better Beauty. And today, I have a question for you. Are you fundable? Are you funding ready? A lot of us will need money at some point to expand and grow our businesses. And we talk a lot about preparing that pitch. But before you even go prepare the pitch, is your business ready for investor money? Are you attractive enough? Do you have the right systems in place needed to make sure that when you are ready and go looking for that investment, you are attractive and you can get the investment? I'm sure you've heard this story many times, especially if you're a founder, from fellow founders and entrepreneurs. Funding fell through. They had an investor interested and then it just didn't go through. There are very many reasons why this could happen. During due diligence, the investor comes in. Sometimes nothing that's your fault, and sometimes through some things that you could have done, and through sometimes just business, you didn't come into a great agreement. But sometimes what happens is during due diligence, and due diligence is when after a funder is interested, an investor, let's say not funder, I don't think that's a word. After an investor is interested in your business, they will come in, especially if they're not family or friend. Sometimes friends and family let us, get away with things. But a real PE, venture, angel, whatever, or even a bank sometimes, or other people just want to put in money. But you need to show them that you are a viable business that will survive and will give them a return. They're not doing it for charity. They're investing in your business because they're expecting to make money. So they have to make sure that this business they're putting their money in will be able to be in existence long enough for them to make money and also recover their investment. One of the biggest things I have seen when they come in to look deeper, and they do look deep, let me tell you, so deep. I have seen it, I have done it in my prior world as a finance. I've also been in a company that's being funded, and I've gone through due diligence as the CFO or the controller. One of the things is compliance. If your business is not compliant in the laws and the regulatory requirements for your industry and for your business, it is risk that an investor is not willing to come into, because they're not going to put money in something that may not survive. And I say this and I keep saying it. Do not put yourself in jeopardy with a regulatory agency, which is usually a government agency, because they have the power to shut down your business. And no investor is going to come into that, because if the government shuts down your business, what happens to their money? What happens to their investment? So make sure your business is registered as a legal entity outside of you. 2, make sure you're compliant with all the requirements of your industry. Like for me, we are in the manufacturing of cosmetics, so KRA needs to come in, NEMA needs to come in, KEBS needs to come in, and so many other compliance things that we need. I have so many certificates, you wouldn't believe it. Make sure you are compliant before you go looking for funding. Number 2 is your financial statements. Meaning you need to have been keeping good records of your financials throughout your business. Good bookkeeping, management accounts, cash flow statements, everything that you can track, your revenue, your sales, your break even, how much you spend. What do you spend it on? Make sure you know how to read your financial statements, because this gives you a story of your business. And I will do another video if you guys would be interested in seeing it, about how to read your financial statements. Please let me know. You need to know your financial statements are in a good place. Invest in a software. Invest in a good accountant. Good software, it doesn't have to be very expensive. You can start just with QuickBooks at the very beginning. It's very affordable and has most of what you will need at the beginning. Number 3 is know your numbers, all of them, backwards, forward, know them in your sleep. That if anyone was walking the streets and asked you, what is this number, what is this ratio, you can tell them. You never want to go looking for funding and you're being asked certain numbers and you have no idea what they are, because that makes the investor lose confidence in you. How can they put money in someone or in a business which is being run by someone who doesn't even know how their business is doing? Because that's actually what it says. You have no idea how your business is doing. So which numbers should you know? You should know your sales or your revenue, top of your hand, every year. How much do we make? Average per month. How are we doing? Down months, up months, your best months. You have cycles depending on your industry? You need to know that. Your expenses. What are you spending your money on? What's your highest expense? What's your highest cost? You need to know that. What's your margin? Your margin is where, like for us, we're in a production business, which means we have what you call sales, and then we have cost of goods, because it took some doing or some money we spent in order to produce in raw materials and labor and all that. And then we get that net number, which is your gross margin. Do you know what that is? And in many businesses, in construction, you have it because the labor you put in, the materials you put in, even I would think even in some service businesses, that let's say you have a law firm or whatever it may be, your billable hours, and then you have those expenses that go directly into making the revenue. That counts what is your gross margin. So you need to know what that is. You also need to know what is your profit, bottom line. After everything else is in, you have your sales, you have your cost of goods, which is, what it takes you to produce or what it takes you for you to generate the revenue, that direct cost that goes into your generation of revenue. You need to know, after all that and the marketing and the sales and all that, what is your profit and what is that percentage? So not just the number, but what is it as a percentage of your sales? You need to know what that is. You also need to know, where is your burn rate? How much money do you spend a month? And what do you spend it on? That's a burn rate. If I give you $1 million today, what do you need and how long is it going to take you to burn or to spend it? Actually, burn rate is how much money do you spend at a given period? A week, a month, a year? What's your burn rate? Because they want to know, is this $1 million even sufficient for what you are looking to accomplish? You need to know, how much money have you invested in your business? Do you have other investors? How much money have they put in? How many? What is a plan? How many shares do you have issued? How many shares are outstanding? Those are all numbers you need to understand so that if you're asked, you know. You also need to know how much of your business, what percentage of your business are you willing to give up or sell? Rather, because if someone is coming to put money into your business, they're expecting to get some shares. How much of that are you willing to give up and for how much money? Those are all things you need to know very well before you go out to look for money, because otherwise it's going to appear like you are not sure, you are not clear about what your plans are, and it makes you lose credibility and trust that you are a good business to invest in. Don't be emotional about it. I know. We found it. I am so emotional sometimes. I have learned to not make any of it emotional and look at it as a business logically, rationally. So make sure you're making rational decisions that are not emotional. Talk to trusted people and make sure these are people that are looking out for you. But also remember, Always trust your gut feeling. It's amazing to listen to other people. It's one thing I have had to learn to do, but please never give up that trusted gut feeling. Have systems. This is a big one because not having systems could actually end up causing you to collapse. And it's easier to set up systems to manage your business, your KPIs, your HR policies, and all those things when your business is actually still pretty small. How do we get this done? How do we accomplish this? How do we get from point A to B? It is easier to set this up in a small business before you get this investment for your business to literally blow up, and all of a sudden you have bad culture, you don't know what's going on, everybody hates working there. So learn to establish good systems beforehand and a culture for the business. What does a brand stand for? What is a brand about? Is it known by everybody who works here? Can we all communicate this brand message, the why for why we are in business very, very properly? So don't be emotional. Know your brand story very, very well. Know your brand, know your why, have systems, know your financial statements, and you'll be golden when they come looking at your books or doing the due diligence from a legal perspective and from a tax perspective. You will be okay. And regulatory also means make sure your tax is on point. Pay your tax, file your taxes. I know right now, especially, things are rough. You may not have the cash flow with the delays in payment to pay for the taxes, but call them, set up a payment arrangement. Be honest, because that could also affect, because it's part of the whole finance system. So if you get an investment and before you go pitch, make sure these things are okay. It can be very frustrating. And when you go pitch, somebody is interested, they come to do the due diligence, you're so excited, you are looking at growing, and then the deal falls through because of things you could have actually controlled and worked on. Now, if it falls through for a whole other reason, that is not your fault. Maybe it wasn't the right deal, maybe it wasn't the right time, I don't know, we'll look for another one. But be ahead. Make sure you're doing these things to be funding ready. Be fundable. I know as women, founders and entrepreneurs, we sit here and we talk a lot about how there's no money for us. And it is true. It is harder. And as a Black woman and an African woman, it's even harder. However, what are we doing to make sure that we are in a space and we are ready to get that money when it comes? I'll do a different video for a whole other slew of things that we may need to do, but this is the beginning because all of this is within your control. You are limitless, girl. You got this.